Hi everyone. I'm sure if you love YouTube as much as I do and consume as much content as I do, you've noticed a recent increase in the amount of GoFundMe campaigns organized by your favorite content creators. From what I've seen, these crowdfunding efforts can be related to a litany of different things. For example, in 2018, PewDiePie organized a GoFundMe to support the CRY, or Child Rights in You, which is a non-governmental organization dedicated to ensuring young Indian children are provided education, are given access to proper health care and nutrition, as well as protection against child labor. When the YouTuber William Osman and his wife lost their home in the 2017 California wildfires, they started a GoFundMe campaign to help recoup their losses and have an easier time building their life back into normalcy. In 2019, Jaden Animation started a GoFundMe to help generate financial support for the bird gardens of Naples Sanctuary and Rescue, whose purpose is to provide parrot welfare. Who knew that was a thing? I could go on and on because there are several examples to reference. Fundraisers and crowdfunding campaigns like this show that even small acts of generosity can make a big difference. For many nonprofits, it's the collective power of many small donations, not a few large ones, that help sustain their work. I think we now see less of these types of GoFundMe campaigns because companies like Tiltify make it a bit easier to work directly with nonprofit organizations for their fundraising endeavors. With that being said, I can't be the only person to notice an uptick of some of these crowdfunding campaigns that entail one content creator raising funds to sue another content creator for some dubious and stupid shit they said. Or maybe they watched somebody else's content and had nothing constructive or intelligent to add at all. I'm genuinely baffled by how some people treat a legal battle like it's some sort of an extreme sport. Like, why don't you go ask the last guy who was excited about his lawsuit how it turned out for him? Like, what is this, Creator Clash Litigation Edition? I'm fully in support of helping someone in genuine need, but I can't help feeling that many crowdfunding campaigns these days aren't actually about necessity. More often than not, they seem driven by the desire to satisfy a want rather than address a need. This sentiment is up for debate, and you can be the judge on what you think of any crowdfunding campaign. Today, we're going to look into one that was brought to my attention, and I saw an opportunity to educate some people on some of the tax complications concerning some of these crowdfunding campaigns. I feel it's important to discuss this because I think this specific situation is teetering on the edge of being troublesome. As if the video title didn't give it away, we're going to be discussing Innuendo Studios and his recent GoFundMe campaign to help him get out of debt. Before we begin, I want to clarify that I have no prior impression of Innuendo Studios. In fact, I hadn't even heard of him before this. However, since researching this, I've obviously seen the other videos that have been created and the thumbnails out there saying that Innuendo Studios is scamming his fans and he's a grifter and an e-beggar and blah 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 blah. I'm not here for that discussion, and I'm happy to leave that discussion with the commentary channels. I am here to help explain to anyone willing to listen why this situation is far more complex than Innuendo Studios seems to believe. I will of course be critical, but I'll take a careful and respectful approach. First off, shout out to Chud Logic for bringing this to my attention. I recently was invited on his stream to talk about my first video that I made, amongst other things, and I had a hell of a time. I told him that I would look into this a bit more because coming from the nonprofit world, I didn't have a full grasp of the tax implications of crowdfunding campaigns, and because I find it fun to research tax and accounting related topics for some reason, I dove headfirst into learning more about this. Before we get into the complicated stuff, let's first take a few moments to understand the foundation of Innuendo Studios' GoFundMe campaign. Innuendo Studios, whose real name is Ian Danskin, is a YouTube channel with over 500,000 subscribers that has spent the past decade producing videos on video games, web culture, and social politics. Throughout his time on YouTube, Ian has frequently spoken candidly about the challenges of freelance work, describing it as rewarding yet often leaving him just scraping by. This came to an alarming point back in May 2025 when he published a video titled "Being a YouTuber Bankrupted Me." He also published a now unlisted video titled 2025 where he discusses the financial troubles he's found himself in. Ian detailed that running Innuendo Studios has left him in over $87,000 of debt due to back taxes, money due to collection agencies, and money due to family and friends who have loaned him money in the past. Knowing that he was not going to earn enough money to keep his life afloat as well as pay off the debt, he decided to organize a GoFundMe in an effort to reach out to his viewers and the community to help alleviate him of this debt. The GoFundMe far exceeded expectations, raising over $155,000 within just a few days, well above his initial goal of $87,000. This provided Ian with a much-needed financial reset and offered him an opportunity to breathe for probably the first time in a long time. That's just a very quick summary of the situation Ian has found himself in. While I can empathize with how stressful of a situation that is, it's important to specify that something like this is entirely avoidable. Massive tax debt, and just debt in general, isn't always something that just happens overnight. Barring some sort of ridiculously expensive medical bill or hospital stay, or something of the like, it generally compounds over time. I can understand if Ian struggled with this in the first couple of years of him as a content creator, but at a certain point, you do need to be able to get a grasp on it. Taxes absolutely suck. I get it. We are all in the same boat here.
In order to be alive, you have to pay 20 different people $200. And you have to keep reciting random digits of numbers. Everything about being alive is just fucking numbers over and over again. Important numbers for this, important numbers for that. You gotta type in this password, you gotta type in this number, you gotta type in this thing, and if you get it wrong, you're gonna go to jail.
With regards to his tax debt, he mentions that as a freelancer, he is required to pay around 30% in taxes.
A basic fact for the self-employed in the US is that you have to pay about 30% of your income in taxes. At my level, this can be between $10,000 and $15,000 a year.
I confess that I haven't done taxes for a self-employed individual before, so I wanted to look into something like this a bit more because that seems like a really high percentage. I only found random articles suggesting that you should put away 30% of your income for things like your federal income taxes, state income taxes, self-employment taxes, so I'm willing to believe that this is close to being accurate. I will absolutely say that in the United States, a sole proprietor or someone who runs their own business by themselves, you can absolutely get raked over the coals in regards to taxes if you don't properly budget your income. One of the more complicated aspects of a self-run business is that sole proprietors pay both the employer and the employee portion of the Social Security and Medicare taxes on income. So instead of your employer paying the 7.65% and you, the employee, paying the 7.65%, you, as the self-employed, pay the full 15.3%. While you can deduct 50% of these costs when it comes time to file your personal taxes, you still have to pay it all up front and only recognize the tax benefit come tax filing time. If you're going to start your own business by yourself, you need to be cognizant of the tax complications right out of the gate, or at least within the first couple of years. You need to work with an accountant to begin to understand this, and then once you have a handle of it, you can hopefully take it under your own wing. Compared to someone like me, who's never been self-employed, my marginal tax rate is much lower than this 30%, and I'm willing to bet I even earn more income than Ian. Obviously, I inherit the benefit that my taxes are paid through my wages, as well as my employer paying half of the Social Security and Medicare taxes. I'm kind of starting to ramble, I'm sorry. What I ultimately mean to say is being self-employed certainly has its challenges that aren't shared by individuals like me who are employed through somebody else. While there are cons to being self-employed, there are certainly just as many pros to it as well. There are basically little to no barriers of entry to start your business. You have total control of the business, you get to create your own hours and establish your own breaks, and the costs to start the business are extremely low, at least compared to starting other types of businesses. The career path Ian chooses to pursue is entirely his prerogative. It is a privilege to have the freedom and independence to make such decisions, but with that being said, No one is obligated to be a self-employed individual, but he chooses to do so and has done so for over a decade now, and I think it's important to note that. So again, I can sympathize with the stress of this situation, but it is entirely avoidable and there are people out there who can help you avoid it. Ian now has his back up against the wall and feels like there is no other option other than to crowdfund to help pay off his various debts. Ian is under the impression that because these funds were received through crowdfunding, they will be treated as, quote, gifts and therefore be exempt from tax. However, taxes are not that simple, and this may not be correct. I really do believe that Ian needs to treat this money with care and caution. Let's get into this discussion involving how the IRS treats funds received through crowdfunding. We're looking at the IRS's website and the page regarding money received through crowdfunding. If you read this entire article top to bottom, I think a layperson would come to the conclusion that Ian's GoFundMe funds should be treated as a gift and therefore exempt from tax. However, there is specific language in this that requires more understanding. Quote, if crowdfunding contributions are made as a result of the contributor's detached and disinterested generosity and without the contributors receiving or expecting to receive anything in return, the amounts may be gifts and therefore may not be includable in the gross income of those for whom the campaign was organized. Contributions to crowdfunding campaigns are not necessarily a result of detached and disinterested generosity and therefore may not be gifts. Let's first dissect the second sentence in this paragraph. Quote, contributions to crowdfunding campaigns are not necessarily a result of detached and disinterested generosity and therefore may not be gifts. This sentence suggests that contributions to crowdfunding campaigns can often be made with personal motives, rather than purely out of selfless generosity. If this is the case, these contributions may not ethically qualify as gifts, since gifts typically imply no expectation of return or benefit. I think it can potentially be argued that there is a benefit in this scenario, and that's Innuendo Studios returning to make content, which people clearly want. This can be confirmed because when you read the messages on the GoFundMe page, there are clearly messages coming from people who explicitly say things like how much they enjoy his work. People have said that his work has, quote, changed their life. There's praise because of the work he's doing for the leftist community, amongst other things. Putting politics aside, these are coming from people who very clearly have an attachment and emotional connection to him, which can potentially pollute the idea that these are made with a detached and disinterested generosity. For the record, Ian has made it clear that receiving this substantial amount of money doesn't necessarily mean he's going to continue making videos. He's left that possibility open, but undecided. There is this sense that if Ian doesn't return to making videos, these contributions could be perceived as having been made without any clear expectation of return for the contributors. However, he still does produce content for his fans on his Patreon page, just not always in the form of videos. Whether Ian produces any form of content and whether it satisfies this principle of contributors receiving something of value in return is unclear to me. That is something that the IRS, or if Ian chooses to work with a tax preparer, will have to decide. Whether or not he makes this content, I still think it's hard to argue that these contributions were made with completely detached and disinterested generosity. That's worth digging into more because I believe it's where Ian could get really hung up. In order to understand detached and disinterested generosity, I read up on some tax law cases where the foundation of this idea came from. The two landmark tax law cases that establish the foundation for determining whether a transfer qualifies as a gift are Commissioner v. Duberstein and Stanton v. United States. I'm not planning to dive into every detail of these cases, I'll just focus on the key points. To be clear though, I don't think Ian's situation is ever going to be taken to court and set any kind of legal precedent in tax law. But I do think it's important to understand the underlying principle. Because in both of these cases, the items and consideration that were transferred were ultimately ruled to be considered taxable income and not gifts. If you'd like to read about them yourself, you can find my sources in the description. First off, let's highlight this passage. Quote, "The course of decision here makes it plain that the statute does not use the term gift in the common law sense, but in a more colloquial sense. This court has indicated that a voluntary executed transfer of his property by one to another, without any consideration or compensation thereof, though a common law gift, is not necessarily a gift within the meaning of the statute." I found this relevant because I believe it's articulating that the term gift in tax law doesn't follow the common law definition, and that even a voluntary transfer without compensation or getting anything in return may not qualify as a gift under the statute. And in relating this passage to Innuendo Studios, I think it's saying that just because his donors and his contributors aren't receiving anything tangible in return, it doesn't mean that the money that they're giving him qualifies as a gift. Next, I found these passages relevant. Quote, "A gift in the statutory sense, on the other hand, proceeds from a, quote, detached and disinterested generosity, out of affection, respect, admiration, charity, or like impulses. And in this regard, the most critical consideration, as the court was agreed in the leading case here, is the transfer's intention. The government says that this intention of the transfer cannot mean what the cases on the common law concept of gift call donative intent. With that, we are in agreement, for our decisions fully support this. Moreover, the Bogardus case itself makes it plain that the donor's characterization of his action is not determinative, that there must be an objective inquiry as to whether what is called a gift amounts to it in reality. It scarcely needs adding that the parties' expectations or hopes as to the tax treatment of their conduct in themselves have nothing to do with the matter." End quote. While these passages are pretty confusing, I think they're trying to summarize that a gift, at least for tax purposes, must stem from a genuine altruistic generosity. And the most important factor in determining if it qualifies is the transfer's underlying intent. Additionally, the courts say that intention under tax law is not the same as donative intent. Instead, an objective assessment of the transfer's actual nature is required. And again, I think it can be argued that these contributions to help alleviate Ian of his debt were made by individuals who have an attachment to Ian and his work. Ian himself organized this crowdfunding campaign and then made efforts to market it to his viewers and his constituents. Referring back to the IRS's website discussing crowdfunding, the IRS views crowdfunding proceeds as taxable income unless they can be clearly classified as gifts made with detached and disinterested generosity, which I believe may be difficult to establish when the organizer is the recipient and he is marketing it to his viewers. Part of the reason that Ian found himself in this difficult position is because he didn't understand the tax complexities of his self-employment status. And I think it's important for him to understand that he's potentially putting himself in a similar position by thinking that all of these funds are considered gifts and therefore not taxable as income. I can't stress it enough, it's really just not that simple, and come the time when he needs to file his taxes, he could find himself in a similar or even worse position. I actually stumbled upon something I found concerning as I was researching this. Ian made a post stating that, thanks to the people who contributed to the GoFundMe campaign, he can now afford to take a trip to Japan to visit his friends. This is a bit troubling, and I'll discuss it shortly, but I first want to address something just as important. I'd like to admit up front that I may come across as lacking sympathy in what we're about to discuss. That said, the conversation remains important, even if my tone may seem colder than I'd like it to. He says in his 2025 video that he accepts only some of the fault for being in this situation, and he believes the other burden to bear is that of the, quote, bad and broken system.
Now, I want to acknowledge that some of this is my fault. The debt would not be nearly so big if I were better at budgeting, if I read my mail faster, if I had followed up about that audit. I am not purely a victim here. But also, this is a bad and broken system, and even if I played it perfectly, there is no universe where I make what I make and finish the year with 12 grand left over for the government. Not in this city, maybe not in this country.
This statement needs to be called out, and it needs to be addressed. Describing the tax system as both bad and broken, I think demonstrates a significant lapse in his judgment. As if I hadn't said it enough, I do believe that self-employed individuals often bear an unfairly heavy tax burden. However, you are not obligated to be a self-employed individual, yet he continues to do so. Despite the system that he's determined is bad and broken, he hasn't made the decision to walk away from it yet. Like I said earlier, he chose his path, fully aware of its challenges after having done it for over a decade at this point. So I kind of find it hard to sympathize when he turns around and complains about the very inequities that he has continued to accept. Plain and simple, the self-employed tax system is not bad and broken. It's just difficult to operate in, and you always have the choice to walk away. I'm sure several other people have said this in their videos already, so it's certainly not going to be a surprise hearing it from me. But it's time for Ian to either get a second job or get a new job entirely. And kudos to him, it does look like he's finally aware of this as well. Now, I know this story came out a couple of months ago, so I'm not sure how much progress has actually been made with that. I know he does have his huge Japan trip coming up, so maybe that's delayed the search a bit. As I reference his Patreon page, I don't really see anything regarding him applying for any sort of jobs, so maybe he hasn't gotten around to it yet. Or maybe he doesn't feel like it's his responsibility to update people on this. I could understand that also. Or maybe he scrapped this idea entirely because his Patreon is doing much better than it was before. My point is this. While this money is a big boost right now, it's going to be gone really quickly. He's already on the fence of whether he's going to continue making videos, so that's a potential revenue stream that he can just kiss goodbye. Hell, I've even made just as much content as he has in 2025, and I uploaded my first video like 2 months ago. And for those people out there who may not know this about me,
YouTube is not my job.
I guess I wonder if his Patreon income, which I assume should still be taxed at a 30% rate, will be sufficient long term. Ultimately, I'm just curious if this is the last time we hear about this, if his long-term problem of financial stability is actually resolved or not. I guess only time will tell. His remark about the bad and broken system wasn't the only odd thing Ian said in this video. He also mentions that in a prior year, both PayPal and Patreon issued documents to the IRS that allowed them to come to the conclusion that he earned twice as much as he had reported.
Patreon sends me my money through PayPal, and from PayPal I send it to my bank. But apparently both Patreon and PayPal report that as income to the government. And so a few years back, I got an audit where they said, you earned twice as much in 2019 as you claimed, which means you owe us twice as much in taxes. I disputed this by their deadline, and I thought it was taken care of, but apparently not. So assuming I can get that year corrected, we're looking at like 60 something. If not, we're looking at least 75, maybe closer to 80, and I still haven't filed this year's.
He said this was a mistake, and he's still working on getting it sorted out, and I hope he figures that out soon. With that being said, it's important that he's made aware that GoFundMe will be required to do the exact same thing. Going back to the IRS's page discussing crowdfunding, we see a section discussing Form 1099-K. A 1099-K is a form that's required to be furnished to the IRS as well as the taxpayer when someone receives money through third-party networks, which in this case is GoFundMe. The limit for tax year 2025 is $2,500, and since Ian raised over $150,000 in his GoFundMe, the IRS will 100% be made aware of this and will want to understand the purpose of the GoFundMe campaign. Ian may still need to report the crowdfunding income with his tax filing and then be offset by the amount he was seeking in crowdfunding. Additionally, Ian will need to provide an explanation as to why this income is not taxable. If the IRS finds out that he spent the funds on something other than his debt, something like, I don't know, using the funds to go on a trip to Japan, he could get seriously fucked over. In the United States, if you crowdfund for any reason, and you spend the funds for something other than the crowdfunding purpose, it 100% becomes taxable income, without question. This is why it's troubling that Ian is using some of these funds to travel to Japan. It instills the impression in me that he thinks all of the GoFundMe money is exempt from tax, and it's not. It's like he thinks he found a legal way to potentially earn income without paying any tax on it, which just isn't a thing. There are legal ways that you can lower your tax liability, but it's with money you've already earned and has already been taxed. However, there are not very many ways to earn and recognize tax-free income. Please pay attention. This is incredibly important to understand. When we review the GoFundMe page, it explicitly states that he's seeking $87,000 to help relieve him of specific debts. However, he raised $155,000. Let's say for the example that the IRS accepts the crowdfunding as a gift and therefore not taxable. The only amount that can be exempt from tax is the amount that satisfies the debt that he's crowdfunding for, meaning up to the $87,000. Also, it can only include the debts that he specifically crowdfunded for, meaning the $59,000 he owes in back taxes, the almost $19,000 in credit card debt, and the $9,000 in debt from his family and friends. He cannot pay off other debts, like student loan debt, for example, and then claim that since it's also a debt, it is also exempt from being taxed. He didn't specifically crowdfund for that, so it wouldn't be included as part of the tax-exempt amount. That means that the additional $68,000 that the crowdfunding campaign raised is not exempt from tax, and there is no doubt about this. It's important that Ian understands that this is not just free money that he can spend at his will. He needs to not only be sure that he pays off the debt, he also needs to be sure to hold on to some of the excess funds and be ready to pay taxes on it. Stop the video and think about why this would be the case. Think of how this scenario could be exploited. Allowing individuals to launch GoFundMe campaigns with small or modest goals, raise significantly more than requested, and avoid taxes simply because the money was crowdfunded would open a serious loophole in the tax system. For example, someone could ask for $10,000, end up raising $50,000, and then not pay any taxes on it. That kind of setup could easily encourage other people to do the same thing, creating widespread abuse. It would be unsustainable and clearly unacceptable from a tax policy standpoint, and I really hope Ian knows this. If we're being really honest here, it's often the wealthy and rich individuals who find a way to circumvent the tax system, not those who are just trying to make ends meet. As stated earlier, I'm all for helping people and organizations when they are in need, and I think if you have the means, you should consider doing the same. That said, I urge caution when offering support to individuals who have played a role in creating their own problems, and instead of addressing them, have worsened the situation by blaming a broken tax system and neglecting basic tasks like opening their mail. I wish Ian the best in navigating this trouble, but if I had anything to say to him, it's to err on the side of caution. You are not out of this yet, so I would tread lightly and conservatively. Thank you all for sticking around, if you have at least. Thanks to Chud Logic for bringing this to my attention. I had fun researching it and looking into it, and as always, hope you learned a thing or two.